If your bank account was frozen tomorrow, your 401k restricted, your home taxed beyond affordability, would you still say you own your money? Or are you just allowed to use it until you're not? Hey, welcome back. If you're new here, I want you to know something before we go any further. This video is not about fear. It's not a conspiracy. It's not political. What I'm about to show you is something most people go their entire lives without understanding, and it costs them everything. So take a breath, grab your coffee, and give me just 13 minutes. Because by the end of this video, the way you think about money, property, and financial freedom will never be the same again. Let me ask you something. Growing up, were you ever given a financial checklist? Get a job, save money, invest in your 401k, buy a house, build net worth. Most of us, or our parents, followed it. Our schools taught it, society rewarded it, and on paper, it makes sense. You work hard, you accumulate assets, and eventually you are free. That is the dream, right? But here's the sentence I want you to sit with for the next 13 minutes. Ownership and access are not the same thing. Read that again. Ownership and access are not the same thing. Because what most people in America have, what most of us think is ownership, is actually just access. Heavily regulated, conditionally permitted, government-approved access. And the moment you understand that distinction, everything changes. Let us start with the most basic one. Your bank account? Right now, somewhere between $2,000 and $10,000, maybe more, is sitting in your checking or savings account. And you probably feel pretty good about that. That is your money. You earned it. It has your name on it. But here's what most people do not realize. The moment you deposit money into a bank, you are no longer the legal owner of that money. The bank is. You become an unsecured creditor of the bank, meaning, in legal terms, the bank owes you that money. But it is not yours in the way your car or your phone is yours. The bank can limit how much you withdraw in a single day. The bank can flag and freeze your account if their system detects suspicious behavior. Digital systems can halt transfers with zero warning. And here's the part that really hits. This is not hypothetical. During the 2008 financial crisis, banks in Cyprus literally froze accounts and took a percentage of people's savings. They called it a bail-in, perfectly legal, completely real. Now, I am not saying that is going to happen here. I am saying it can, and if it can, do you really own it? Here's the line I want you to remember. If you need permission to use your money, do you own it? Keep that question in your head. Because we are going to come back to it. Okay, let us say you're smart. You do not trust banks with large amounts. You are disciplined. You save. Let me introduce you to inflation, the silent thief. Every year, without your vote, without your consent, without even a notification, the purchasing power of your money shrinks. The Fed targets 2% inflation annually. Sounds small, right? But at 2% per year, your money loses half its purchasing power in 35 years. And in recent years, we saw 8, 9, even 10% inflation. Think about what that means. You do not spend that money, you do not lose that money, but it is worth less. You did everything right. You saved. You were responsible. And the system quietly, legally, reduced the value of everything you stored. No crime was committed. No one goes to jail. That is just how it works. That should hit you emotionally. Because it is not fair. But more importantly, it is structural. It is baked in. And most people have no idea it is happening to them in real time. Now, here is the one that is going to hit hardest. Especially if you are American, homeownership, the crown jewel of the American dream. You saved up. You put down the down payment, you signed the papers. The bank said, "Congratulations." Your family was proud. That house is yours. Or is it? Let me ask you something. What happens if you stop paying property tax? Not your mortgage, just the property tax. The government can seize your home, auction it off, and you walk away with nothing, even if you paid off your mortgage 20 years ago. So you are telling me, even if I own the house outright, if I stop paying the government annually for the right to keep it, they can take it? Yes, exactly. But it does not stop there. HO rules can dictate the color of your front door, what you can park in your driveway, whether you can run a business from home. Zoning laws can prevent you from building, expanding, or even gardening in certain ways on your own land. And eminent domain, the government can legally take your property even if you do not want to sell for what they call public use. They pay you what they decide it is worth. So here's the line. If you stop paying property tax, you do not own your house. You are renting it from the system. Let that settle. You are renting your home from the government, and the rent is called property tax. Let us talk about retirement, because this one affects almost every working American. You have been contributing to your 401k for years, maybe decades. You've watched it grow. You feel secure, but here's what the fine print says. Try to take that money out before age 59 and a half, 10% penalty, plus income tax. So you could lose 30 to 40% of your own savings just for accessing it early. Want to access it later in life? The IRS mandates required minimum distributions, meaning they force you to withdraw a certain amount every year, whether you want to or not. And the tax treatment of your retirement account, Congress can change that. It has before. It could again. The money is in your account. It has your name on it. But the rules around when, how, and how much you can use it, those belong to someone else. It is your money, but under someone else's rules. No political blame here. This is structural reality. It is how the system was built. Okay, stop. I need to be very clear about something before we go further. This is not doomed. This is not a conspiracy. And this is not me telling you the system is evil. The system was designed for stability, not sovereignty. There's a difference. Stability means most people, most of the time, have access to most of their money. And that is genuinely valuable. Banks do not collapse every decade. Retirees generally get their funds. Homeowners generally keep their homes. But sovereignty, real financial freedom, means you control the timing, access, and usage of your wealth. And the current system was not built for that. Here is what I want you to picture: an ownership spectrum. At the lowest level of control, custodied wealth. That is money in banks and brokerage accounts. Someone else holds it for you. One step up, regulated wealth. Your 401k, your IRA. It is yours, but gated, then taxed assets. Real estate. You own it, but conditionally. And finally, controlled income. Your job. You earn it, but only as long as someone else employs you. Most Americans live entirely within this spectrum and call it financial freedom. But financial freedom is not about net worth. It is about control. So what do you actually do with this information? First, do not panic. That is not the move. Panic is what keeps people paralyzed. The move is awareness. Then strategy. Here's how people are actually starting to shift the balance of control in their favor. Diversify your asset types. Do not have all your wealth in one category. Mix custodied, regulated, and hard assets. Build multiple income streams. A job is controlled income. A business, a rental, royalties, dividends, those are less dependent on a single decision maker. Practice liquidity planning. Know how fast you can access your money in emergency. If the answer is not quickly, that is a problem worth solving now, not in a crisis. Understand your tax exposure. Know what triggers taxes, what defers them, and where your vulnerabilities are. A good CPA pays for itself 10 times over. And reduce dependency concentration. The more you depend on one bank, one account type, one asset, the more exposed you are. None of this is radical. It is just intentional. We started this video with a question. If your bank account was frozen tomorrow, your 401k restricted, your home taxed beyond affordability, would you still say you own your money? I hope now your answer is more honest. Not hopeless. Not fearful. Just honest. Because the people who understand this system, who actually see how it works, they do not try to escape it. They do not rage against it. They learn it. They move through it deliberately. And they find the pockets of real control within it. You do not need to escape the system. You just need to understand it. If this video made you think, share it with one person who needs to hear it. And if you want to go deeper on any of these topics, subscribe. Because we are just getting started,